Everybody, this is John. Welcome to the free video, and it's Friday afternoon. So just so you guys know, I'm doing this a little early. Tomorrow I'm heading to New York City for the New York City Traders Expo. That's at Times Square, Marriott Marquis. If you guys are there, I'm doing two talks on Monday. I think one at like 10:30 in the morning on Monday with TradeStation, and then one at 4:15 just with the Money Show. So that's on Monday. If you're there, feel free to stop by, say hi. I think it's free to go to the show. In terms of the markets, you know, they continue to be very bullish. The only question is, I'm just looking at, you know, we've had a good run. It's time for a pullback. And the only question I have is a pullback going to be like this to the 8 EMA, which we essentially got today, or is it going to be a little more? And I don't know, except it's pointing and shaping up for a little bit more. So we've got a squeeze, it's run out of momentum, and if we look at the S&P futures on terms of a shorter term time frame, like the 195-minute chart here, I mean, this is setting up. I mean, that's kind of a bearish setup. I mean, it could turn long at any time, we know that. But I'm trying to see if there was, I mean, has there actually been another short squeeze on this recently? Maybe not. Let's just go through and take a look here. No, nothing short. Okay, here's one. So the last one that triggered short, I mean, turned into a decent, you know, 80 some odd point sell-off. Okay, so I don't know if that's what's going to happen. It's just when I see something like this, it's good at that point to be cautious. So I've taken a lot of long in the room today. I took a lot of longs off the table. Went home 95% cash. Had some hedges on, and bought some puts on the Qs, and you know, we'll be ready to reload if necessary. But at this point, it's more about protecting what we have and acknowledging that, you know, hey, we may have a little bit more of a decline in place until that 195-minute squeeze either one fires long, or if it does fire short, runs out of momentum. Okay, which would be designated by the yellow colors, like right here. So this is kind of, you know, when this runs out of momentum, it turns yellow. So that's what we'd look for. All right, Qs, same thing. They're butting up against some resistance there. Of course, Apple is kind of the big stock here. It's had a big run, and we closed almost exactly at this fire line. That support, a normal pullback would take us back to the 21-period moving average. So there's still some downside there. And what I didn't like, and I ended up closing out the remainder of, was the moves in Netflix. Yeah, it went to the 8 EMA. I would rather close it out though and wait and see if we get a continued sell off to like 466 where I can reestablish positions as opposed to holding on through that. And then LinkedIn, we dumped that one too. And again, maybe I could, you know, reload it at 265 or 264 or something like that. Twitter, we took half off the other day, came off today, you know, dumping it. There's no reason to hold on to this stuff. You can always get back in. So just want to keep things kind of fairly light that way. And then I continue to like the dollar index here, and we've got a huge, huge, huge squeeze setting up, and I think this thing's going up to 96.85. The easiest way to do that from an options perspective is to buy puts on FXE, all right? So, and in terms of the Qs as a hedge, I mean, you can see right now we're pretty close to that 8 EME there, but we're also, this is a lot of resistance. If it breaks, then we have the potential to come down fairly quickly to 106.42, which also lines up with the 21-period moving average. It's not a huge move, but it's tradable and it's a good hedge. So what I like to do is that the remaining longs that I do have, I can sleep a little better at night because I know if we gap down Monday morning or Monday there's a decent selling, at least I've got a little bit of a hedge there, all right? And that's just all about essentially getting into a zone of consistency as a trader. Okay, so on Tuesday, I want to let you guys know, I'm going to be doing a free webinar Tuesday, March 3rd, 8 o'clock East Coast time, that's 7 o'clock Central, how to generate consistent trading results in today's markets. I do think we're getting to a point where it's going to start getting more volatile, and in terms of creating consistency, there are a couple of key things that you have to do that you have to be aware of, and if you're not, it's going to be the same thing. Easy come and easy go, which can be frustrating, but it's going to happen to most traders that are out there. Most traders who had a really good February are going to lose it all in March, no matter what the markets do. You know, the saying is that making money is easy in trading, and it is, but keeping it is the hard part. Keeping it is the game, and that's what comes down to consistency. All right, so I'm going to be talking about why trading options for newbies, retirees, even part-time and full-time traders, even if you work full-time, why it's appropriate for consistency. A lot of times people think, oh, options are scary, there's leverage, et cetera, et cetera. There are so many more advantages of trading options over futures, forex, or even stocks. And if you're not aware of that, then that's what I want to talk to you about. Why options are, and I talk about it right here, why options are safer. One strategy I use for consistent trading results that you can use the next trading day. And the list goes on and on. It'll be good. This is the kind of stuff to me that's fun. It's kind of the latest stuff that's working in this market. First name, email address, register now, and looking forward to seeing you at the webinar.